Gold prices hitting a 9-year high today. This on the back of a huge dollar sell-off. Chris Verrone thinks there's a few more ways to play this if the Dixie keeps diving. Let's go off the charts. Chris, take it away.
Yeah, well, I think, as you said it, what's driving this entire story is weak dollar. This is a major regime change in dollar here. If you bring up a chart of DXY, you're challenging that 95 level. We're back to lows of the year. It closed on the lows of the day today. I think you risk something like 90.91 in USD. If you look at it in terms of euro context, you're talking about maybe 117, 118 in terms of euro USD. And the benefactors of this, I think, are clear. The metals continue to work. Yet gold, is it stretched? Probably stretched in the near term, but you have good support back near 1750, 1775 on the gold chart. I want to continue to respect the uptrend there. Higher lows has been the story there, not just for the last number of months, but really gold started to turn up and bottom 18 months ago. So before any of us knew about this crisis, before any of us knew about US dollar, gold began to forecast that. So I want to respect the strength there. If you're looking for beta, or if you're looking for something maybe more timely, silver, I think, is another good bet here. Breaking out of an absolutely huge base, going back about 7, 8, 9 years, silver getting up through 19 is a major, major move. I think 26 is ultimately where this is on its way to. But I think bigger picture, if you want to play it through the corridor of equities, what are the stocks that tend to be most correlated to moves in gold and moves in silver and lower moves in dollar? So we came up with this list of about 10 names that have negative correlations with dollar. So dollar down, these stocks up. Names like CAT and Deere and Southern Copper, Cummins, that one broke out today, Parker Hannifin. There's a good group of industrial material stocks that tend to benefit when dollar down. So if you're looking to play it through the equity market, 10 names here, I think, very good opportunity.
Yeah, I mean, Tim, a lot of these names get a sort of a double boost because they benefit from being multinationals with the weak dollar, but also the weak dollar provides them upside on the commodity price in which they sell, basically.
Yeah, so cue up the Huey Lewis and turn on your VCR and Back to the Future I mean, think about Southern Copper. I mean, this was a name we barely talked about, but Chris is right to point out these charts. First, gold silver. Gold-silver ratio essentially went to all-time lows for silver players, and since those lows, silver has actually outperformed. Its rally's been golden. It's been up 40% relative to gold in this rally for gold. There's a lot more to go with silver. I think the other PGMs, look at platinum and see the breakout there. We're going to get back to those highs that we hit before the crisis. I do think these mining stocks, and remember, the ultimate play for the weaker dollar, if you're playing equities and you want to play an asset class, is emerging markets. And if you look at that EEM, it's just getting back above where we were at pre-crisis levels. If the dollar's going to 91, like Chris says, emerging markets and Germany, EWG would be the places I'd go.
You snuck that would you rather, and you're so stealthy. You thought I wouldn't catch it. But it was a silver and gold.
I never do that.
Would you rather, and you chose silver. Well, you never do that.
Well, Guy and Grasso aren't here. They're the guys that do that.
You got to pick it up, right? All right. Jeff Mills, to play a weak dollar, where would you go?
Yeah, well, Tim kind of took the words right out of my mouth in terms of emerging markets. It was actually going to be my final trade. So any area where you can get that type of international exposure, and emerging markets specifically, if you look at the correlation between just the overall index there and the dollar, it's been fairly negative, especially as the amount of dollar-denominated debt has increased more and more in EM. So if you want kind of a pure play that's very levered to the inverse dollar, I would certainly say emerging markets. I get a little cautious about some of the names in the industrial space. I know we've been doing well over the past couple of weeks, but we're right back to where we were in the beginning of June. If you look at even mid and small cap stocks, industrials, value in general, we're about to do battle with that downward sloping 200-day moving average. So I want to see what happens at that point in time because we failed in June. I still have questions about the sustainability and really the speed of the economic recovery. So I would be more inclined to go overseas and get the exposure there.
Yes, Tim, you've raised your hand. What's your question, sir?
Well, I just, it's not self would you rather if you don't say self would you rather. I feel like I was classified with something that I just didn't say that.
Okay. Well, it's like a metaphor. I mean, basically, you did it without using the actual words, so it's the same. It's the same thing.
This is true.
Anyway,